This video is for educational purposes only and should not be considered financial advice. How to successfully trade the Strat. Intro: broadening formations, candle formation, time frame continuity, examples, and recap. Welcome back, traders. Today, we're going to dive into how to successfully trade using the Strat trading system invented by Rob Smith. We'll cover the basic patterns and show you how to implement them. Let's get started. In our previous video, we introduced you to the Strat, focusing on three key concepts: broadening formations, candle formations, time frame continuity. Let's start by taking a closer look at broadening formations. Broadening formations are identified by the price making higher highs and lower lows. As we see in this diagram, the price moves higher and higher, then crashes and moves lower and lower. The key to success with this pattern is to look for trades on either side of the formation. To effectively trade broadening formations, watch for price action at the edges of the formation. Look for reversals or continuations to set up your trades. Candle formation. As we discussed in the previous video, Rob classifies candles into three following categories, with a number value from 1 to 3 assigned to each. 1 is an inside candle in its consolidation, 2 is trending, 3 is an outside candle, that's the broadening formation. Candle patterns. Next, let's go over the main candlestick patterns used in the Strat. These patterns include the 3-2, the 3-1-2, the 2-1-2, the 2-2, and the Rev Strat patterns. Each of these can signal a reversal or continuation. Understanding these patterns and their implications is crucial for executing successful Strat trades. Candle patterns. These patterns help you identify entry points, locations, and targets. This is a mostly comprehensive list of the Rob Smith patterns, but you can check his material at the Sepia group to make sure you don't miss any other patterns. Now let's move on to one of the most important aspects of the Strat, which is time frame continuity. Time frame continuity ensures that your trades align with the larger market trends. If you watched our previous video on using higher time frames to avoid bad trades, you know that aligning with the higher time frames can make a significant difference between a successful trade and a losing one. When your trade lines up with the larger time frames, you have institutional sponsorship behind your trading decision. Rob Smith suggests looking at the yearly, quarterly, monthly, daily, and hourly charts to gauge the strength of price movements. Now let's go over some real examples of how to use the Strat patterns in a real trading environment. This is a daily chart of the Euro-Yen. We've drawn out some of the broadening formations to help you see how to draw them yourself. What we like to do is look for 3 swing highs or swing lows to connect our broadening formation, and that will give us our turning points. Of course, nothing is exact, but we found that this is usually the best tactic. As you can see, we have one swing low, another swing low, and then another swing low, and then price reverses. A swing low, and then another swing low, and then price reverses. A swing high, and then we have this swing high. Price did not reverse from here, but then after this swing high, it did. Again, a swing low, another swing low, and then a reversal. And then we have a swing high. This is a swing high as well, and this is a swing high, and you see it did reverse a little bit, but it had to go a little bit further, and then it started to reverse from up here. One thing to say about this whole move that we're going to look at is that on a larger time frame, this broadening formation is happening to the upside. So if we're looking for time frame continuity, if we look at this on a weekly, monthly, or quarterly chart, we will see that this is to the upside, that these are all green candles. So that is key with understanding time frame continuity. So you'll want to be taking trades mostly to the upside. And if you are taking trades to the downside, make sure you're moving your stop loss to break even sooner rather than later. And you don't get your reversal until here. And that's when the daily chart will make the weekly and the monthly chart start to turn red. So if you're trading on lower time frames, make sure you're staying in sync with the daily and the weekly time frame continuity. So let's take a look to see the candle patterns that Rob Smith uses. Here we have the broadening formation of a 3 candle engulfing this 2, taking out both sides of the candle. And this is a daily chart, so this is a very big move. This is another broadening formation on a smaller time frame. We also see a 1, which is a consolidation, and we're looking for price to move on either side of this 1 candle. Now what price will do is it will move outside and then go right back in, which is what happened here. And then it pulls back and goes to the other side. So this forms a 3 candle. So this is a 2 that went 3. And if you see 1 candles, those are great candles to find setups because you can look on either side. And if you're wrong one way, you're going to be right the other way. And the great part about it is that you have a tighter stop loss. So this 2 went to a 3 and then moved down and took out this side of this 3. And that's where Rob Smith tells you to get out, is once it's reached the magnitude, which is the term they use for when price moves to the other side of the broadening formation, that's when you get out. You can also leave a runner, which would have been a good idea here. So now we have another 1, and then we have a 2 to the downside, and then a 2 to the upside. Now this is what you want to pay attention to. It is the full body of the candle, including the wick. So if it goes down here, which would have been an entry if you're strictly using the technical understanding of the Strat strategy. However, it's always a good idea to wait to make sure that this doesn't become a 3 like it did here, or create another candle that goes to the other side. And that's what happened here. This is a 1 and then a 2 down and then a 2 up. Once it crossed this level, that is your entry. So both of these are what they call the Rev Strat because it's the reversal strategy. This next trade setup happens after price took the top of this 3. We're looking to see what direction price is going to go now that we've completed magnitude. So we look at this candle, which is a 3, and then a 2 down and then a 2 up. That is another one of Rob Smith's patterns. A 3, 2 down, and 2 up. Your entry is here at the top of this 2. Once the 3 has created the broadening formation, this 2 down moved the broadening formation further. Then once it gave a hammer to the upside, you're waiting for price to clear the top of this candle, and that is your entry to the upside to take out this side of magnitude. As we see, price continues to make the broadening formations to the downside and to the upside. This is one of Rob Smith's patterns, a 2 down, a 1, and then a 2 up. So we have price moving to the downside, then consolidating with a 1 candle, and then once price broke this level, that is your entry to the upside. This is also a 2-1-2 pattern, but this is a continuation, not a reversal. This is a reversal pattern. And like we said, draw out your trend line to the swing lows, this swing low, this one, and this one. And now you have your reversal pattern. And this continuation pattern, what you're looking for is your 2 up, the consolidation, and then once price crosses this 1 right there, that is your entry. And your stop loss, of course, is below the 1 candle. Now, you can also have a stop loss at around 50%. Once you're tagged in, you can move your stop loss to around the 50% of this candle. This final set of patterns shows you a 3 engulfing candle, which is very large, then a 2 down, and then a 1. Now a 3-2 pattern, which we covered in the previous video, that would have been an entry here. However, price never makes it back to this top of the 2 candle. Instead, it gives you a 1, a 2 up, and then a 2 down. One key thing to pay attention to this 1-2-2 pattern, which is the Rev Strat pattern. Look at the top of this 1, and you see when price breaks it, it goes right back and closes underneath it. That is your clue that this is a reversal pattern. It tries it again and still goes back. You see how it opened lower and then it went up and then reversed. And on this day, what you would look for is an entry right around here. Once price breaks this level, this is now a 2 down, and you want to enter right here. And as you see, you got this big move to the downside. Now, technically, once price cleared this level, that's magnitude. So you want to trim some of your trade here and then continue holding a runner. And then our last trade is another basic 2 up, 2 down bearish trade. You have a 2 up. This candle clears price here of this candle, 2 up, and then it clears this candle right here, 2 down, and that is an entry to the downside. To recap, to successfully trade the strat, remember these key points. Identify broadening formations and trade the edges. Recognize and understand the main candlestick patterns. Ensure time frame continuity to align with larger market trends. By applying these principles, you can enhance your trading accuracy and confidence. In our next video, we'll be covering how you can use ICT concepts to help refine the strat trading strategy. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe to our channel for more trading tips and strategies. Don't forget to hit the notification bell so you never miss an update. Until next time, happy trading.